Something is breaking beneath the surface of global money. Debt is climbing. Trust is thinning. And the old playbook no longer works. That's why one question keeps coming up again and again. Gold or Bitcoin? For most of history, the answer was simple. When currencies failed, people ran to gold. It survived empires, wars, and monetary collapses because it couldn't be created out of thin air. But today, we're living in a different world. Money is no longer just physical. Trade happens digitally. Capital moves globally, instantly. And that's exactly where Bitcoin enters the picture. Smart investors understand something crucial. This isn't about hype or ideology. It's about positioning. Gold still plays a critical role. Central banks are buying it aggressively. Nations want neutral assets that don't depend on another country's promises. Gold is trusted, time-tested, and politically safe. When inflation rises and currencies weaken, gold quietly does its job. But here's what's changed. Gold protects wealth, it rarely multiplies it. Bitcoin, on the other hand, was built for a world where money itself is being redesigned. Bitcoin's supply is fixed. No emergency printing, no bailouts, no policy meetings that change the rules overnight. That predictability matters. Smart investors aren't ignoring Bitcoin's volatility. They're understanding it. Volatility is the price of early adoption. And despite every crash, Bitcoin has continued to recover, grow, and integrate deeper into the global financial system. Now institutions are involved. ETFs exist. Custody solutions are mature. Regulations are forming. What once looked experimental is becoming infrastructure. So what are smart investors actually doing right now? They're not choosing sides. They're diversifying across scarcity. Gold for stability. Bitcoin for asymmetry. Gold for protection, when inflation eats purchasing power. Bitcoin for protection when trust in systems breaks entirely. Gold anchors portfolios. Bitcoin adds optionality. This isn't about betting everything on the past or gambling on the future. It's about understanding that the next monetary system will likely be hybrid, part physical, part digital. Those who cling only to what worked before risk falling behind. And those who chase only what's new risk unnecessary exposure. Smart investors position for both outcomes because the real mistake isn't owning gold or Bitcoin. The real mistake is owning neither. The future of money isn't coming someday. It's unfolding right now, and the smartest investors aren't asking which asset will win. They're asking how to be prepared no matter which one does. History rewards those who prepare early, not those who react late. The question is simple. How are you preparing for what comes next?